Have you ever wondered why some people seem to progress quickly on their path to financial freedom, while others, despite having good jobs, can't seem to break free from the paycheck to paycheck cycle? You might think that making the leap from employee to investor requires an extraordinary income or a stroke of luck. But what if I told you that transforming your salary into assets is not only possible, but could be the best decision you make, even if you start in your 30s, 40s, or 50s? People often say, investors are born, not made, or only those with a lot of money can invest. These beliefs are dangerous because they lead us to think that the path to investment and wealth building is reserved for an exclusive group. But the truth is different. Anyone who understands and applies the right principles can start turning their salary into assets that work for them. If you've ever resigned yourself to the idea that hard work alone is the key, it's time to see the bigger picture. Let me tell you the story of Chris Gardner, a man who went from living on the streets to becoming a renowned investor. Gardner worked long hours at jobs that barely covered his needs. However, his mindset was his most valuable asset. Instead of accepting his fate, he educated himself financially and learned about investments and finance. With the discipline of saving part of his salary and a determined focus on investment, he built a solid future that now inspires thousands. Gardner is living proof that it doesn't matter where you start, but what you do with what you have. Most people see their salary as an end in itself, a means to cover expenses and nothing more. But true investors see it differently. Your salary is the seed that can grow if nurtured with the right strategies. Before you spend, ask, is this an investment in my future or just a present expense? If you're in your 30s, now is the perfect time to allocate a portion of your income to investments that yield returns. And if you're in your 40s or 50s, it's not too late. You have the experience and maturity to make wise financial decisions. While it's tempting to spend first and save later, successful investors do the opposite. Paying yourself first means allocating a fixed percentage of your salary to an investment or savings fund before paying anything else. Think of it as a mandatory bill. The psychology behind this habit puts you first and forces you to live within your means, which is crucial for starting to accumulate assets. You don't need millions to start. John Bogle, founder of Vanguard and pioneer of index funds, advocated for low-cost investing as a simple way to build wealth. Index funds allow ordinary people to invest in the stock market with little money and achieve solid returns over time. So, whether you're in your 30s, 40s, or 50s, consider allocating part of your salary to an index fund that tracks an index like the S&P 500. The key is to start now, no matter the amount. Consistency is what leads to amazing results. For example, if you start with $100 a month at 40 and gradually increase it, the power of compound interest can turn that small seed into a large tree of assets by retirement. As your assets grow, it's essential to diversify. Don't put all your money in one basket. Diversification is like having multiple pillars supporting your financial security. You could have a mix of stocks, real estate, and low-risk assets. And don't forget to protect your investments with insurance and financial advice, especially as you approach your 50s. You might think, I won't invest now, I'll wait until I have more money. But what if I told you that waiting is the biggest risk of all? Time is your greatest ally when it comes to investing, and delaying only decreases your chances of success. The difference between those who take action today and those who wait is enormous in the long run. I can't talk about investing without mentioning Warren Buffett, who bought his first stock at 11 and now in his 90s continues to invest. But the most important thing is that Buffett always emphasizes that it's never too late to start. What matters is consistent action and informed decisions. Even if you didn't start at 11, you can take advantage of the time you have now, whether you're in your 30s, 40s, or 50s. Now that you know the strategies and have heard real-life stories of people who transform their lives, what will you do with this information? Wealth is built one day at a time, starting with small decisions that add up. So take that first step, become an investor in your future, and turn your salary into assets. If you've made it this far, comment on what your first step will be to turn your salary into an asset. Share this video with someone who needs inspiration to change their financial life, and follow our channel for more content to help you on your journey to financial freedom. Remember, the best time to start is now.